Kicking off today with a couple of successful April campaigns before we touch on the latest interest rate announcement from earlier in the week. Starting with number 7 Boyd Street, a most wonderful unique warehouse conversion which was handled by Julie and Lottie, showing over 100 groups through the opens and a crowd at the auction of over 150 people. With 5 bidders, seeing this property did overachieve, selling for $1,503,000. As did number 3 at 68 Lyndhurst Street, handled by Phoebe, which again saw over 100 groups inspect, with auction day having 4 bidders. Now the first bid was in excess of the reserve price, seeing an outcome here well above the lovely owner's expectations. Despite the disruptions through April, we saw the team sell 30 properties, with 7 of them selling on the last day of the month. Underpinning these prices, as reported by the portal sites, is the shortage of listings. In fact, most are reporting a 20% reduction here. Now, just when we're seeing some positive news emerge from the market, even with CoreLogic's recent report showing 2 consecutive monthly rises to the National Home Price Value Index, increasing by 0.6% in March and by 0.5% in April, coupled with most of the big 4 banks revising their pricing forecasts, interest rates have been lifted again by 25 basis points for the 11th time, with a new cash rate at 3.85%. This comes as a shock of the financial markets, who were placing bets ahead of the last board meeting that priced in a 96% probability of no change, as did the majority of the economists, who predicted another pause. But the RBA Governor Philip Lowe said in a statement, inflation in Australia has passed its peak, but at 7% it's still too high, and it will be some time yet before it will be back in the target range. He goes on to say, whilst the recent data showed a welcome decline in inflation, the central forecast remains that it takes a couple of years before the inflation returns to the top of the target range. Inflation is expected to be at 4.5% in 2023 and 3% in mid-2025. Finally here, according to the CBA economists, they are forecasting the cash rate to slash down to 2.85% by the end of May next year. Before we sign off for the team, we've got some wonderful properties coming up under the hammer this month, so we do look forward to seeing you out and about. Thanks for watching, and I'll see you all again in a fortnight.